Talk about what to look for and the role of those lower prices with Mr. Ross Gerber, President and CEO at Gerber Kawasaki Wealth and Investment Management. All right, Ross, what's top of mind besides your 420 party, which I know you're getting pretty pumped about?
Yeah, it's still a little too early. I'm a little too busy to think about 420 yet, but it's going to be an amazing party.
Is there a number this afternoon that could ruin the party, Ross?
There's no number that can ruin the party. We've already baked in bad numbers in our forecast.
Was that a pun baked in? Okay.
Yeah, it's a pun. No, I think the analysts have marked down earnings a lot so far, and hopefully the analysts aren't that wrong. So they're looking at around 85 cents or so, and we think that's probably about right, 85, 90 cents. But that said, what the real question is like how much cost cuts or how much of the price cuts are being offset by cost cuts? And so what are the real margins of the car going to be? And so that's the big mystery. I mean, Elon keeps slashing prices on cars, and I think he's treating Tesla a little bit more like a commodity than a luxury good. And that's also a problem. And, we'll see how it looks.
What type of margin do you think needs to show up? And when you say the real margin of the car, are you insinuating that there's a different number than just kind of what's going to be reported on the total company, like gross margin?
Yeah, like gross margin that includes credits is a little misleading. We're looking at what's the real vehicle margin being over 20%. Okay. So that's what Zach had promised, Zach Kirkhorn had promised that Tesla was going to try to keep a 20% margin on the actual vehicle. So that's, I think, the big question, and I think it's going to be a tough bogey for them to hit. But the stock's already moved down, about 10% from where it was, I think, on anticipation of this. So the real question is how different earnings are going to be from what the market expects. And to a large degree, the market expects a pretty negative situation here. So maybe that'll help us after they report.
The average estimate I see, at least from the analysts that are tracked by Bloomberg, is calling for an automotive gross margin about 23% for the quarter, for the year about 24%. Is that roughly in line with your expectation?
Well, I don't know if that's overall margin versus the actual margin, but we're thinking closer to 20, So, once again, I don't want to get into semantics. I think we have to look at the actual numbers, and we can all guess all day, but Tesla clearly is seeing some cost reduction in the vehicles, but they've lowered the Model Y price by about 30%. And so we don't think that they've seen that level of cost reduction. So margins are going to be hit, and we just don't know how much. And unfortunately, they need to be doing these things to sell cars. And that's, I think, a bigger concern that Tesla needs to address.
To that point, what type of volumes would justify a drop in margin to that 20%, or if it's something lower? Deliveries, I see estimated for the year about 1.8, production at 1.85. Where is volume able to compensate for margin in your mind? What would be impressive?
It'd have to be over 2 million vehicles. I mean, that's kind of why I was upset when I saw delivery numbers, because they had an increase in inventory despite massive price cuts and the benefit of the U.S. government, help. And yet we didn't sell every vehicle in inventory. So I was pretty surprised that inventories went up, actually, and my number for deliveries was way higher than what they actually delivered. But I once again, we're trying to assess the damage that Elon is causing to the brand and Tesla's ability to sell cars. And clearly it seems to be quite substantial because they can't sell cars.
Ross, is there I know it's, judging from our conversations and stuff that you put out in the public realm as well, it seems like for various reasons, from the Twitter thing, now maybe to some of the delivery numbers and cost changes, that you've become a little frustrated with some of the things happening at Tesla. I mean, is there a possibility that, is there a one-day scenario where Ross Gerber, drops Tesla shares?
Sells Tesla? Yeah. Well, there's two things. One, I want to make it clear, I'm not really frustrated with Tesla at all. The people at Tesla are doing a great job, and they're working really hard, and they're doing great things. I'm very frustrated with the CEO, Elon Musk, who works at another company called Twitter, who's arbitrarily changing prices 5 times a month, which basically he can't articulate Tesla's sales strategy in any intelligent way. And so, I'm really getting frustrated by the fact that they continue to cut prices and hurt margins and they won't run an ad. So the price cuts just from last night will cost Tesla over $1 billion, but they won't run an ad and won't spend money. Now I'm hearing rumors that they will. We'll see. But I've never seen a business not advertise their product and just lower the price. It's like insanely bad. So I think we got to get to a point where Elon's philosophies towards certain things maybe have matured, and Tesla needs to start acting like a real big company and doing what Apple does, which is constantly reinforce the awesomeness of the brand in the public's mind. And what Elon's doing is constantly reinforcing that he's a MAGA Republican in the public's mind, and that does not sell EVs. Whether it's true or not isn't the issue, but it does not sell EVs. And I think at some point people have to accept that going on Tucker Carlson does not sell EVs. And that's just a reality. And so, I think it'd be great to have a CEO who actually markets the product.
Ross, do you think there is evidence that there is a competitive bleed happening where people are buying other EVs? Do you see any other brands or empirical evidence that people are trading either out of Tesla or buying other EVs, or might this just be a big macro industry-wide slowdown?
Now, I want to say that I live in California, the largest EV market in the United States, and it's a liberal state. So I want to, preface this by saying you can say, well, it's the libs or this or that, but this is California, and Tesla sold over 500,000 vehicles last year in California alone. And so to just discount the value of the libs in California is very short-sighted. And what the libs want is a Rivian. So when you walk around now in my neighborhood, the few people who have Rivians, everybody's like, ooh, a Rivian, like they used to be with Teslas. And it's sad.
All right. Noted. Thanks for the anecdote and the update, Ross. And I know your mood is going to improve for your 420 party tomorrow.
I'm fine. Listen, I'm fine. Tesla's going to do great things over the long term. They're having some issues right now. I'm just not happy that the CEO of the company doesn't want to advertise the vehicle when they're having trouble selling the vehicle. Right. It's stupid, to be honest.
All right. Noted. Ross, always appreciate the check-in.